You ever get that feeling that the stock market is, well, a rigged game? What if I told you it kind of is, but you could learn to see the moves of the big players before they happen? Today, we are going to decode the market, not by listening to the talking heads on the news, but by learning to read the story the charts are telling us.
All right, let's dive right in. Now, for most people, a financial chart is just this intimidating mess of squiggly lines bouncing up and down. It looks totally random, right? Like trying to guess the weather a year from now.
I mean, look at it. It's just a dizzying dance of green and red. You might as well just be flipping a coin. And honestly, that's what the people who really move the market want you to think.
But what if this isn't noise at all? What if it's a language, a kind of secret code that once you understand it, reveals a high-stakes battle being fought between financial giants? And what if you could learn to read it?
Think of it like the ocean. You've got all those small, choppy, random waves on the surface, sure, but the real movement, the big, powerful tides, those are driven by massive, predictable forces. In the market, those forces are supply and demand, and they are absolutely controlled by what we call the smart money. So, who exactly is driving these huge moves, and what's their strategy? To figure that out, we need to get our hands on the playbook of the smart money.
Smart money isn't some secret society. It's the big players. We're talking hedge funds, major institutions, the real insiders. They trade in such massive volumes that their actions literally create the trends that everybody else follows. You know, they don't just ride the waves, they make the waves. And if we can understand their playbook, we can learn to surf right alongside them instead of, getting crushed by the tide.
And this isn't some newfangled idea. Over a century ago, guys like Charles Dow and Richard Wyckoff saw that the market moves in a predictable three-act play. It starts with accumulation. That's when the insiders are quietly buying. Then comes public participation. That's the big trend everyone sees on the news. And finally, it ends with distribution. That's when the insiders cash out at the top.
Just think back to the last big market crash. Remember how the news was all doom and gloom and everyone you knew was panic selling? Well, the smart money was on the other side of that trade, calmly buying up everything at a huge discount. They're like master shoppers, just waiting for the stock market's version of a Black Friday sale.
Now, this chart might look a little complicated, but it's basically a roadmap of what they're doing. See that big panic selling on the left? That's phase A. Then you see this long, sideways grind in the middle, phase B. That's the smart money just absorbing all the remaining sellers, testing the waters to see if anyone else is left to sell. It's only after they've bought up everything they want that they finally start pushing prices up and kicking off the new trend.
Now let's flip the script and talk about distribution. This is when the party's in full swing. The news is amazing, everybody feels like a genius, and your neighbor is suddenly giving you hot stock tips. Well, that's the exit music for the smart money. They are methodically selling all their shares to that euphoric crowd at the top, usually in a really fast, volatile rush before anyone even realizes the party's over.
Okay, so we get the game, we understand the strategy, but how can we actually see the footprints of these giants on our own charts?
So the first clues are in the candlesticks themselves. You see a hammer, that little candle with a long tail at the bottom? That can signal that buyers are stepping in to defend a price. But look, these are just breadcrumbs. The real smoking gun is volume. A big price move on low volume, kind of suspicious. But a big move on high volume, that tells you the big players are getting involved. Price tells you what happened, but volume tells you how much conviction was behind it.
But to get a really powerful view, we need a better tool. And this is the volume profile. Instead of showing volume over time down at the bottom of the chart, this tool flips it on its side. It shows you exactly which price levels attracted the most trading. It's basically like an X-ray of the market.
And this is what it looks like in action. See those long horizontal bars? That's where the real business was done. And that red line, the volume point of control, or VPOC, it highlights the one single price with the most volume traded. That's the fair value area where institutions were most active. This is how we can actually see their accumulation and distribution zones.
Okay, I know what you might be thinking. This Wyckoff stuff is 100 years old. Does it really still work in today's world of supercomputers and algorithmic trading? That's a great question. Let's find out. The game is exactly the same, but the players are faster, a lot faster. High-frequency trading uses supercomputers to make millions of trades in the blink of an eye. It's not chess anymore, it's speed chess, played on a global scale. And these algorithms now account for over half of all trading volume.
And here's the other thing.
A huge chunk of all that trading, about 35%, doesn't even happen on public exchanges like the New York Stock Exchange or the NASDAQ. It's happening off-exchange, in private venues, totally hidden from the public eye.
A big piece of that off-exchange world is made up of something called dark pools. These are basically private stock exchanges where institutions can trade enormous blocks of stock completely anonymously. And why do they do this? To avoid tipping their hand to the public, which would cause the price to move against them while they're trying to build their position. So the key thing to realize here is that while those fundamental principles of accumulation and distribution are absolutely timeless, the modern game is faster, it's more fragmented, and a whole lot less transparent than it's ever been. And that makes it even more important to know what you're looking for.
All right, let's bring this all together and see how it completely transforms the way we look at the market. So the market is always in this constant dance. It finds a comfortable price range, a balance point where buyers and sellers are pretty happy. That's our accumulation or distribution zone. Then something shifts and it goes on a journey, the trend, to find a new fair price. Our job, using these tools, is to spot when it's about to leave the dance floor and join the journey.
So what's the real edge here? What's the takeaway? First, it's knowing that trends aren't accidents, they are engineered. Second, it's understanding the playbook the smart money uses to engineer them. Third, it's using tools like Volume Profile to actually see their footprints. And finally, it's realizing that even in this crazy, high-tech world, these century-old principles still give you a rock-solid framework for understanding what's really going on.
So, the next time you pull up a price chart, ask yourself this: are you just seeing a bunch of meaningless squiggles? Or are you seeing the plotted results of a strategic battle for control between the most powerful financial players in the world? Because once you see it, you can't unsee it.